let's keep equities aside. Let's focus on the commodity space. Manisha Gupta joins us to fill us in with what's going on there. Manisha.
Thank you for that, Nigel. I'm looking at the crude oil prices because we've seen very volatile moves come into this one. We are holding back above $88 a barrel. Remember, last week was a 3% decline. But this week, we've more or less tried to play that range between 87 to 91 on the higher side. Well, the strength comes in on the back of decline in US dollar index, which is still holding below 106. And that has led to buying in many of these dollar-denominated commodities. So when you look at the crude oil prices for the month of April, we have seen 3% of gains onto this one. It clearly is off the high of $91.50 a barrel, which was not just the high in April, but the high for this year as well. Since then, this has continued to base as a resistance in case of the crude oil prices there. We also are looking at a very big gap when you look at the US crude and the Brent crude prices. So 83 and 88 tells you that there's a $5 of a gap between both the crude prices here as well. Markets also have reacted to the EIA data, which is showing 6.4 million barrels of a draw in the US inventories. Well, the street was anticipating 1.6 million barrels of a build-up. So this has been a surprise and is the reason that you are looking at that 0.5% of a gain for the crude oil prices there. Well, it also is about the US GDP numbers and the PCE index data that comes in from US in today and tomorrow, and that would give you further direction. Markets also have seen some buying ahead of these numbers. Well, this will tell you on inflation and the rate cut cues going forward. But most of the tangible commodities actually have come into buying ahead of this important data. And then there is a lot of contradicting fundamentals also continuing in case of crude oil prices is the reason that you have seen $91 hold as a resistance. The one is that oil tankers, which have been idling at Red Sea, have made now progress in deliveries, which is reaching its destination. So that concern about delayed and disruption in supplies also seems to be getting taken care of. The other thing is about lower expectation when you look at military escalation in the Middle East. That has taken some premium off the prices as well. Analysts would tell you that nearly $5 to $8 of a geopolitical premium buildup that we are seeing in crude is something that the crude prices will more or less continue to maintain. But if we see more de-escalation, then the crude prices can decline to 85 and levels of below as well. Well, the US is looking to reinstate sanctions on Venezuela, which has already happened, and Iran companies, oil companies as well could come under that radar. That would be an added positive sense in case of the crude oil prices there. Interesting report from ANZ which says that the global oil demand for the month of April stands at 101 million barrels per day, which is still on the higher side. And we have seen demand continue on the stronger side from US. China physical markets continue to buy as well. And Europe, while has enough gas, but the crude imports there have been on the stronger side. So a couple of supportive factors coming in from there.
Okay, thanks a lot for that.